Righto, you dog money miners. Guy Keller from Tribeca is on his way, and but Uranium is brought to you by Quattro Project Engineering. I believe, as the EPC paste experts, lads, get them over to Rook 1. Look, the bloody backfill and the reticulation that has to go in there, they've put kilometres of it in at Olympic Dam. They're the paste plan experts. Send them over to the Athabasca Basin.
And for that matter, any other commodity as well, I reckon.
Oh, mate, they'll be flat out on this if they get it.
Blown away chatting with the team last week. Phenomenal. What they can't do, there's not many things,
Exactly. Bloody NexGen, give Jez Palmer and Quattro a buzz. Right now. So, this was a round 2. But it probably worked out better because guys may be closer to picking the bottom now than he was when we originally called it a couple of weeks ago.
Well, 1 month wiser for that gap, and it was a relatively eventful month. And regardless, since we had Guy on the last time and actually shared the conversation, a lot has happened in the world of uranium, hasn't it, Matty?
Yeah, I think, and look, we go through it all. Company specific, a lot about the contracting market. Guys obviously got some good ears to the ground with utilities, funds, everyone involved in the uranium bet, whether that bet's up or down. So always a great chat with Guy, the voice of nuclear for Australia.
Here we go.
Let's get into it. Righto, you think uranium in Australia? Mate, talk about the poster boy of it, Mr. Guy Keller. Mate, you've taken, well, since Quakes has fallen off Twitter, mate, you've had to take the global mantle, I think, mate.
I don't feel like a poster boy with the markets going the way they're going, but, hopefully maybe I'll look like one.
No worries. So this is a bit of a round 2 effort, but I think when we did it last time, I think it was just before Boss's quarterly, I think, and we had a bit of a tech issue. So as we said, you're probably glad you didn't. That one didn't go to air because you might more chance of being right now. One day closer, mate. As I said, you run the. Forget it every time. The nuclear uranium. What's your fund's name, Guy? Tribeca. I do it every time.
Tribeca Nuclear Energy Opportunities Fund.
That's the one, mate. Righto, take it away, boys. Let's talk nuclear and uranium. I assume that's what we're talking about with Guy.
I think it is, mate. I think the logical place to start this one, Guy, is the kind of elephant in the room, and that's the massive short interest in a heap of the names. So 3 of the top 5 most shorted stocks on the ASX, I'm sure this is no surprise to you, are uranium miners now. Well, one's a developer and 2 are miners. So I'm interested to hear your thoughts, particularly with the lens that your strategy is a long short. You're obviously behind the long-term narrative of uranium here, but how are you thinking about this on the surface?
I think he's asking if you still made money on the way down, Guy.
It can be interpreted anyway.
Look, if somebody, I said the other day, if somebody had given me a crystal ball 6 months ago and said this was going to be the pricing of a lot of the uranium stocks, I would have thrown the crystal ball out, I think. Look, it's been, it's kind of, I've got to view it in a positive lens. The sentiment's terrible. No generalist wants to touch the space. Shorts are at all-time high and continue to seem to be adding, and not just in the ASX, but we're seeing it in North America as well. And, I kind of sit there and I say now, I don't see the marginal gain of shorts being added down here because we're getting such an interesting part of the market that it's not going to take much for that sentiment to change. And, you've got, again, hedge fund dinners in New York. I think there was 8 or 10 of these guys at a dinner 2 weeks ago, 60%, like 4 or 5 of them were all pitching short uranium. And one was asked, why you're still short uranium? And he said, because it's a really easy short to control. There's an element of truth to that. There's no big boys in this trade. And as I said, generalists are all sitting on the sideline with a lot of things. But, it's a head scratcher as to how committed they've been to the trade, to be honest, to me.
Why is there consensus short uranium amongst the hedge fund crowd in New York there, Guy?
I mean, to be honest, they were kind of a little bit late to the party, right? Like the short really started out of Asia and the ASX stuff last year, in the second half of last year, and that was thematic guys responding. From what I could gather, there was a bunch of guys that had made, or funds that had made money being short the lithium space. They tried to roll across to rare earths and realised that there really wasn't a lot of borrow available in any of those names. And then, somebody pointed out that spot price was moving from 107 to 80 odd at the time, and said, you know what, this is actually not a bad short. So the ASX stocks underperformed a lot of the North American stuff last year because they were benefiting from the tech, a data center AI type thematic. But I think when that Deepseek, I got it right. Normally I say deep fake or deep heat, Deepseek. I think when that came out in January, that sort of gave the US hedgies a runway to go and get into that short, I think. Plus they knew there was lots of overhang sitting in the spot market. The SPUT Physical Uranium Trust has been pretty ineffective because that's been really easy to control, stopping that going to a premium, and these hedgies have been in that. So hence back to it's an easy short to control. He's right.
The Deepseek reaction guy was super, super interesting. And I've heard you speak to the point that you don't have a lot of your demand thesis backed up by data center demand and these sorts of things. But I am curious to hear your thoughts on the sort of joltiness, the sort of frothiness in the market that such an announcement would lead to 10+% movements in the stocks. What does that kind of tell you about the broader market sentiment at the moment?
Oh, I mean, look, market sentiment across all sectors is pretty nervous and dancing close to the door at the moment. When you throw market sentiment of resources where, the resource sector had a pretty good January, people made some money for the first time in a while, and they're all nervous. I mean, we're waking up to a different tariff headline every day and then seeing multiple changes to that, during our day as well. So, it kind of frustrated me at the time because I didn't really think there was that much benefit to the uranium stocks on the build-up of all that sort of tech interest, but they certainly got whacked on the way down. It's names that realistically are not going to be supplying uranium to any tech company build-out in the next 5 years, also getting caught up in that. I think, again, that's just another bow in that sort of short thematic of being able to point to that, being able to point to with the physical overhang we had in the spot market, being able to point to tariffs and all sorts of things to add to that trade. So they've just been hammering that point home.
So how many other organisations like yourself that have a long short strategy for uranium are there around the world in the lens that, like, okay, for Australia, for instance, we've got 2 producers that you can get enough borrow on to short. Then you've got some developers like Deep Yellow as well that are up there as well. But once everyone's long short and say you're net 10% long or 110% long, and you've got to hedge something, is there an accumulation of shorts as well that are contributing to these shorts just because there's not as many names to short to hedge yourself?
Oh yeah, look, I hear so many different iterations of why people are short. Some of the, that Boss Paladin Deep Yellow versus they're long other things, and and then you look in North America. I mean, you've got a bunch of Canadian tariff baskets that almost every US investment bank's got out there, and they're all short baskets, obviously, because of the tariffs. And you've got like Denison and NexGen in those baskets. There's no way that either of those companies are going to be producing cake in a can to go to the US during this current Trump administration, yet they're thrown into these short baskets. I can understand when you look at that and say Cameco's in there because they're selling a lot of uranium to the United States at the moment. So you're getting a whole bunch of, that sort of stuff as well. So as I said, I've probably heard a dozen different iterations of various reasons of being short something versus long something else. And, it's from the perspective of me being long short, I mean, we are basically a levered long portfolio and have been. So our short is not necessarily a big structural short. It tends to be shorts, maybe with country risk, where we might be, long a country asset and short something else there if there's going to be some geopolitical problems. Short via ETFs and hedging longs via put options, which is mainly US listed stuff and some Canadian stuff. So, again, should I have rethought that and been net short the portfolio? As I said, 6 months ago, I would have thrown out the crystal ball because there was just so much positive news flow coming from the nuclear side of things.
Yeah, and how does it when you're short URN or URA, does that short interest in that ETF then translate into the actual underlying equity holdings as well, or not?
That's a good question. I actually don't know the answer to that. I would assume, it may be. I doubt it though, because it's shares that are in existence already, so they've already been created.
Yeah, it shouldn't be, sure.
It's against somebody who's long it. So, if you were collapsing the share structure on the ETF like you can do with some, then yes, absolutely, there'd be selling pressure coming into those stocks. But no, you're short against something shares that are already out there.
Such a substantial dislocation between the spot price and the term price right now, Guy. Why?
Because the spot market's easy to. Look, we had Grant Isaac came out, CFO of Cameco, came out at the BMO conference and spoke about those ANU pounds. That was a Kazakh physical vehicle that, for whatever reason, folded. They originally bought their just shy of 2.5 million pounds from Kazatomprom. Kazatomprom, for whatever reason, wasn't going to buy them back from them. And these are financial guys that spent almost 9 months in the market trying to sell their material. And there was plenty of people that wanted to buy it from them. I'm guessing most of them are happy that they waited. So we've had that overhang in that spot market, which is badly managed pounds. Grant Isaac alluded that had cleared. The market misinterpreted his context there, which he clarified later to some brokers, I heard. But again, they were in buying 2 weeks before he turned around at a conference and mentioned that overhang. So they're not that silly. They're not going to go and buy pounds. They were basically mopping up the last of that. So, and that has been badly managed. And as I said, the only real buyer that's not an end user has been the SPUT, and that's been managed extraordinarily well to stop that trading at a premium. They're buying it at sub 10%. And they're selling it back out at minus 2% to stop it going to a premium.
Describe the mechanics there of managing it from stop trading at a premium. There aren't many of these closed vehicles like trusts which structurally do trade at premiums for a very long period of times. They typically do trade at discounts, right? So, what are you seeing there that says it's being managed well?
Just watching the flows and talking to all the brokers and talking to the SPUT guys. It's when you do see it, as I said, at minus 10 or minus 11, they're coming in to buy it, and when it's getting close to NAV, they're selling it pretty aggressively and trying to hold that down. It's I would love to see SPUT. If it gets close to a premium, I'd love to go and see them just go and do an institutional raise at NAV plus 1 cent. Go and raise $100 million. And if you're a fund like myself invested in a whole bunch of uranium and nuclear related stocks, and the spot price is being held back because the financial buyer's not able to play, and I pay up a couple of percent to do a raise at a premium, why wouldn't you?
Yeah, well, you're not forced. They're not forced to buy the pounds at whatever price it is. They can buy them in 2 months if they want.
As I said, SPUT with $100 million in their pocket would be just a completely different market overnight. I would think that the first hedgie that would be short would blink, and it wouldn't be long before others followed. But look, that's just ideal world. If I don't know what their plans are and whether they can do that or whether they would do that, but I'd love to see it happen.
Sorry, you keep going, Guy.
I was just going to say, and as for the end users, again, Cameco alluded to it, something that we verified as well, is that the fuel buyers are So the utilities, remember, there's only about 24 fuel buyers in the whole wide world. It's not like you've got 1,000 steel mills bidding for a cargo of iron ore. They're sitting there. You know, when the term price is below the spot price, they're never mentioning the spot price. They completely ignore it. But now that the spot price is down at $63 or $64 or $65, wherever it is, the utilities are turning around to some of these developers and saying, hey, you need to lower your floor price on our contract negotiations because the spot price is lower. And as I said, the likes of Cameco are turning around and saying, sorry, pal, we'll talk with an 8 handle, thanks very much, because spot's irrelevant. And Mr. Utility, if you step in and try to buy £500,000 in the spot market, it's not going to be with a 6 on it anymore. So they're not getting involved because they're trying to arbitrage that in their conversation with developers. But you look at, so Constellation, for example, again, one broker picked it up in North America. In their financials, they talked about their 2025 capex, which was $3 billion odd US dollars. So they're the biggest nuclear generator in the United States at 21 gigs. They're restarting 3 Mile Island. So 1.7 billion going towards 3 Mile Island. They made an explicit reference to having just over $1 billion US dollars to spend on nuclear fuel, with, again, an additional comment saying, because we want to secure our needs as well as building inventory. So Constellation need to spend $1 billion US dollars this year on nuclear fuel, which includes uranium, and the spot market's sitting here ignoring it because they've all been so caught up in all this short-term noise.
Cadre will make you feel better about short-term noise. Ain't noise you hear out of them's bloody RC and diamond nails just punching into the earth.
What does that sound like?
Oh, it sounds like victory. The victory of potentially finding some. The noise of RC chips being accurately collected and deposited and sampled and assayed by
I love
their
that sound.
absolute state-of-the-art sampling techniques. So
Sample management is next to the. I was going to say next to none, but that sounds bad.
No, well, and speaking of management, Trav, like you won't hear any noise from management up above about drill cost blowouts because it just doesn't happen. They're on your side.
The only sound I can kind of think of that's probably most accurate is just the cash register just ticking over.
Oh, and working class man in the background. That's quite pertinent. So
that is K-drill.
Oh, mate, just get in their web and prepare to be dazzled. What do you think BHP's role is in the spot market? Because from what I hear, like most of the pounds that, the size of what Olympic Dam produces is the same as what one of the Kazatomprom assets produces. Like 8 million pounds is a lot of uranium compared to these small startups. And from what I've heard, a lot of the stuff they sell usually goes into the spot market. Have they got an influence on the spot market since it's so thinly traded and they just don't really care? They just get rid of it anyway?
So they definitely used to, and the subtle change that they've made is they're now talking more directly to end users, still selling on spot price terms. So again, Mr. Utility negotiating with Olympic Dam with a 6 handle isn't going to go into the spot market necessarily, but it's not going through the spot market as far as I'm aware. Again, BHP was supposed to be the saviour of all utilities with Olympic Dam expansion. And, again, a few months ago, they put out their documentation for the expansion of the smelter and the refinery, which doesn't include any uranium expansion, which means, they won't be going to 12 or 14 or 16 million pounds like the utilities have thought. They'll be staying at 8. Again, another bullish anecdote that the market kind of ignores because we're all in bear mode.
You got much colour on what the contracting environment's like at the moment in terms of, are people avoiding market reference pricing mechanisms because the spot's trading so much lower? Because, the floors that they were talking about, a couple of months ago are well above what the spot price actually is now. Are they going to more fixed price arrangements or any info out of the very opaque market that you've got?
Yeah, look, I'm hearing, obviously, the likes of Cameco, and they're quite public about it. They're holding firm to the term price as their negotiating point. And they can, so they are. I'm hearing as well that there's a few developers who are being potentially told they should be doing more contract discussions, are breathing a little bit of a sigh of relief because they're able to say, whoa, the utilities are trying to tell us to lower our floors, so we're not going to engage with them, which also means that they'll then delay decisions to go and restart or turn their minds on. And those that are producing, so the 9 odd projects that started last year, those that don't have contracts in place for some of their incremental pounds are also breathing a sigh of relief, because we've really only seen one of those projects come on reasonably on time. Everyone else has had issues. So whilst the utilities are sitting here trying to lower the floor price, most of them are wanting to, not acknowledge that the spot price should be a starting point for any market-related component they've got, just because they're all of the agreement that it shouldn't be down here.
And what are the market-related ways that they can calculate the price of the contract as it fluctuates if they're not using the spot price? Can you use the midterm price or?
Yeah, they can use any price, really. I mean, some of what I'm hearing is a sort of an average between the spot and the term, as a way of sort of, finding a middle ground there. The floors and ceilings are still, quite popular, especially, and again, someone like Cameco doesn't necessarily need it, but for some of these FID projects, they definitely want a floor in place. And if it's got a 6 in front of it, they definitely won't be signing it. So the floors and ceilings are quite. So they're all calling them hybrid contracts, which means it's a mix of a whole bunch of things that makes it impossible for investors to work out exactly what they're getting until they publish some sort of weird price in their quarterlies after they've sold it all.
We saw over the past year or so, Guy, plenty of restarts, or a handful of restarts start to come back online, start to see some quarterlies come out. And one of the common critiques had been that sort of 60 up to $100 was an area that would incentivize plenty of production. And obviously we've come back in price. But just looking at the performance of a lot of those restarts and the true costing that we've started to see come out, has that changed your thinking on what incentive pricing will actually look like going forward?
Oh, yeah, 100%. 100%. I mean, it's, as I said, we've had 9 odd projects that have had some level of infrastructure, CapEx, and some level of production in the past. And most of them have had cost blowouts, time problems, and ramp-up issues. And we're sitting here with a short list of greenfield projects that need to build a mine, build a road, build a power line, build a water pipe, build a plant, build everything. And they're sitting here, kind of saying, hey, don't worry about it. Our costs will be okay. It definitely has raised it, which is why I think you're seeing some of these things, push back on a myriad of reasons. But the utilities are still kind of believing the corporate presentation, saying, well, these guys will be here in 2 years' time. Well, no, they're not. It's going to be an interesting year. And for a bunch of reasons, I think utilities will be forced back upstream this year. And I think they're going to start really getting a bit of a reality shock that a lot of these things aren't going to be coming on when they think they are. And at these prices.
What does that kind of look like? Is that JV stakes? Is that equity in projects? Is that helping them with debt and getting offtake? How do you think about them coming upstream?
I just think in the fuel cycle, they're going to be forced to look at uranium. I think this whole, we can go down the rabbit hole of Trump and Russia, but maybe I'll just briefly make the comment and see if you want to go down there. I think that a resolution between Russia and the United States with respect to Ukraine is actually going to be bullish uranium, because it'll take the pressure out of the downstream, being the conversion and enrichment, that has so distracted all these utilities for so long. And just in addition to that, the converters are going to be saying to these utilities, thanks very much for your contract, but we actually need the yellow cake delivered to our site because things are tight and we're not going to actually. In the past, it's been a flexible arrangement in delivering the LOK. So that's why I think utilities will be coming back for the uranium side, which means they're going to start trying to wave useless pieces of paper in front of these developers saying, here you go, here's a contract. And guys like me are going to say to these developers, that's actually a noose around your neck and a liability for you, as we've seen very publicly in a few of these restart projects that are hanging themselves on legacy contracts.
We can go there if you want to, Guy. I'm not going to talk about the Russia Ukraine bit, but I think it's an interesting point. But there's a bit of a theme with like kind of the smaller scale restarts as well, right? ASX Peninsula really burdened by delays and blowouts and a contract liability.
Yeah, and at $30 uranium. That contract book looked okay, and even had there been better decisions made on that restart, and yes, there were some things that were beyond their control with respect to their drying and packaging, but, that's the thing. These utilities, it's a perfect example. These utilities are saying, we're here as your partner, but if you don't deliver us the uranium on time, then there's going to be a financial penalty. They're provisioning money that needs to be going towards their plant restart and their wellfield development. And that's what I'm saying to all these guys. If you're 2 or 3 or 4 years from production, unless you have a commitment from or a requirement from debt providers to show price certainty on a certain part of your future production, don't do it. And if you are required to do it, put your start date 12 months after you're telling me or telling the market that you're going to start, so that if you do have any delays, because I guarantee you, if you start on time and you've got a contract in 2028 with a utility to deliver some pounds and you say to them, hey, I've actually got pounds in 2027, I guarantee you they'll take them. As opposed to sitting there in 2027 saying, sorry, I've had some delays, I don't have it. And they're saying, well, you need to find it. Or pay us some money for it. So, it's been, especially down here in the ASX, investors, we want to see a contract. We want to see contracts. It's like, if you're going to get cake in the can, you're a viable project, full stop. But you've got to be able to do that.
We're going to talk stocks, boys, or?
Yeah, absolutely.
We'll start the probably the latest news, I'd say, be EnCore last week, Guy. We've seen that just essentially got hemorrhaged after, I would say, driven by the last line of that announcement that the CEO was departing, which was, touted. He's pretty well regarded fella in the uranium, in the ISR industry. And look, I think we spoke about him last week. It just looked like even the cash they had at the end of December, over half of that was due to go to Boss, which the first bit's already obviously gone there. Just looks like they're still under a lot of financial pressure to achieve that. What's your take on EnCore and the Alta Mesa and everything else they got going on?
Firstly, doesn't Boss look like a rock star? He just sold a whole bunch of pounds at $100 a pound with the spot price at 65. So
I think he'll be electing to take cash, I think.
I believe that would be prudent, yeah. But look, it's another perfect example of restarts not being easy. Ironically, I was actually had a meeting with both of them on the Friday morning, and so 3 days before it all happened, and didn't get any insight that was going to happen. And it's a perfect example, I guess, of just things not going right and boards getting impatient or frustrated. I mean, we've seen it here in some ASX listed stocks as well, where boards have got impatient. When you could probably argue the boards maybe have a responsibility in that process as well. But look, EnCore, Alta Mesa, they had sort of a first world problem. They turned the plant back on. Paul Goranson, CEO, built that plant, so he's a very good plant operator, and they've got a third of it operating, and they were getting better recoveries and better flows than they anticipated. So they found themselves at a little bit of a bottleneck with wellfield development. They would now sort of reassuring the market that they've solved that problem and that that potential bottleneck has been rectified with getting more rigs on. They've still got, without Paul there, as I said, yes, there's some expertise around that plant, but the second circuit is basically just a few wires that need to be plugged in. They've got certainly expertise to be able to do that. But yeah, I mean, you're right. Again, it comes down to wording. That stock got slammed because this interim CEO announcement was a legal officer. And so immediately the US markets assumed that because they were, having to now deal with a US filing, that there'd been some legal issue and that this guy was going to be the only one to get them out. What it turned out to be was that the legal officer was the only other guy that had his name on documents about to go to the SEC. So there was a 200-page technical document that they figured that he was the one that knew that inside out, given he'd read it a dozen or more or 1,000 times, or however many times you read these types of things. And they didn't really think that the market would say, oh, wow, the legal guy, so therefore there's a problem. So as I understand it, they've been doing calls at the end of last week with management, with brokers and some of the key shareholders, investors in the United States, and sort of placated them on that. But I mean, again, it's just another example. You look at that price action and say, is a 50% sell-off warranted? And the answer is no, because it's still a producing asset. They've still got another plant that they've proven in Rosita that they got up and running. They use those well fields that from last cycle, and they're developing their next one. So, you kind of turn around and say, on a valuation perspective, it's screening pretty cheaply. The good thing is there's call options in the US. For me, that was an easy way to flex back up there, was to buy some call options on that. So if it does continue to flounder around or for whatever reason decide to go lower, it's not going to hurt me too much.
Do you think is Boss appear to be in a prime position with them? One, because if they are under financial stress, then if they do have to raise money, and Boss did want to take obviously they've only got project level interest with Alta Mesa, but if they did want to move on them, they'd be a hell of a lot cheaper on a share price basis. But they've got the option to, wait for more pain if they want to. What do you think? How do you think Boss is sitting? Like, is it a negative effect on them or more of a positive long term?
I think it's positive. I think it sort of gives them. I don't know the details of the joint venture agreement, but Duncan's proven to me over 8 years to be a pretty savvy operator. So I would imagine that there's the ability for them to get more involved in that project if there was going to be a problem. And the reality is the two companies have got a good relationship. So if EnCore, for whatever reason, is in play, there's potential levers that could be pulled there. Again, I don't have any of that information, and would be sitting there thinking that it would be naive to think they're not in play down here, because they're in a good jurisdiction in South Texas there. They've got good ability to ramp there, and they're also in some other places like Wyoming and South Dakota with some good assets. It would be silly if Boss was not having a think about things if it started getting interesting around other parties.
What do you think about? What would I've been pretty supportive of Boss along the journey, so I assume you're bullish on them. What would you like to see them go overseas, or like they've just picked up the exploration JV ground in Northern Territory, hunting for another Jabiluka like everyone else is, no doubt. Do you think having US operations and another jurisdiction, another culture would make the business a bit more complex? Would you rather see him stay in Australia? What are you thinking?
Well, firstly, I think that he's got Andy Wild working with him now, and Andy knows that part of Australia pretty well. It's some pretty good ground up there, and a pretty easy way to get a foothold into into having a sniff around there. So I think, it'd be interesting to watch that. I think that earn-in's structured pretty well. But yeah, I mean, look, there was a reason he moved in with that strategic joint venture with EnCore, and it would be I would be much prefer him to be in the US with those guys doing things and running the rule over things where they've already got the ability to sort of lean on the EnCore team than other jurisdictions. I mean, I don't see there's. I mean, I know he used to be in Namibia. I don't see there's much value added in being there, or Canada's too hard, and every other jurisdiction's kind of marginal if you're a player like him. And maybe Australia gets more interesting if the federal election changes things, and Roger Cook relaxes, or Christopherly up there in Queensland relaxes. Maybe there's some opportunity there, but a lot of it needs work. So again, how you can be short Canadian developers on a tariff basket and not long US uranium projects on the other side just befuddles me. But the time will come there.
How do you think Boss's attitude towards M&A in general may have changed given the recent share price kind of movements? Like there was Jabiluka, and they kind of showed their interest there before everything kind of went south with ERA.
That set off a bloody snowball, didn't it?
Yeah, and then EnCore as well. That deal was struck when the stock price was much higher as well. What do you kind of think their attitude would be right now? How they would kind of fund that,
Yeah, I mean that's the problem with the whole sector, right? There's not a huge amount of confidence from any CEO to really consider serious M&A. And even though there's some phenomenal deals that could be done, I mean, you kind of sit there and say, okay, yes, your share price is not performing, but it's a sector-wide problem. And I mean, I think it comes down to a CEO like him having some strategic conversations with the right shareholders and sort of feeling them out as to what their view is. Because, I mean, if you get your register in support of what you're doing and you're doing something we've seen a lot of M&A and consolidation in the uranium sector just to get a bigger ETF weight, right? Like there's no accretion. A lot of it doesn't make sense. It's land grabs. It's all this sort of stuff. They're probably all regretting it now because they're bigger weights in the ETF and getting hammered on the way down. But, it's if it's a truly accretive deal and you've got a group of shareholders on your register that think that this is truly a sort of 2020-like opportunity where this is just going to go again, then I don't think you're going to get too badly punished if you're doing a deal that people believe in. Hence why, being somewhere that investors are already comfortable with you being.
On the deal front, how are you reflecting on Plummet and Fission? Sort of, now we're in March. I think the deal kind of closed after a pretty lengthy process, late December.
Dust is settled, you'd say.
Yeah, well, I mean, I guess the market seems to wants to wait for what they're going to, they're running through the ruler through that project and looking at all the studies and the costings and what have you. And they're probably, I wouldn't be moving too fast on it if I was them at the moment, because you probably want to bring that out in a better market. But yeah, I mean, full disclosure, I didn't own Fission just because of, I just had different views on the project compared to what they were telling me. And I don't see it being a pre-2030 project anyway in my models. I won't tell you where I got it starting, just in case they're listening. But it gives them a foothold, I guess, in a pretty good jurisdiction, and it's a much better asset than some of the other things they were pointing to in their portfolio. But yeah, it's got work to do. But again, they don't really need to be doing very much with it at the moment. Investors and shareholders have sort of got over the fact that the deal's done. With the benefit of hindsight, was it done at the right time? The deal's done, so it's something they can point to as an eventual second project.
Do you have comfort on their balance sheet? Obviously, they absorbed a bunch of the cash from Fission, which is handy, and their last kind of quarterly, maybe showed things were okay, but it came out in the half-year accounts that there was actually a pretty chunky prepay in there, which was in the detail, accounting for a good chunk of the operating cash flow. So how do you sit on the balance sheet front for Paladin?
I mean, I'm more focused on what it looks like in the fourth quarter. Because regardless of what they were saying at the beginning, and they kind of learnt the hard way, those stockpiles are not an ore body, and there was plenty of sort of stories as to what sort of material was getting chucked on those at the end of the days. And, they're going to have to sort of prove that they can ramp up the mining of that ore body successfully when they go into mining, which kind of has me just holding out till the third quarter. And just, once I get some confidence there, I don't worry too much about the balance sheet. Because they'll be able to get a consistent grade and be able to, prove their ability to ramp that asset a bit better. But, they're kind of just in a weird zone here. And, with all the smoke and mirrors about timing of deliveries and sales and, this sale missed that quarter and what have you, I don't anyway, it's not a core position for me at the moment.
We always set up on site, waste plus ore equals more ore. Might have been what happened to them with tipping those trucks, I think.
The developers, Guy, the ones of interest on the ASX, I can think of Bannerman, Deep Yellow, in Namibia. Are you just thinking that they get delayed in this kind of environment, sort of further and further incrementally?
Yeah, I mean, look, there was obviously a site visit there after Indaba, and a bunch of brokers and investors saw Paladin, saw Bannerman, Deep Yellow, and maybe one or two others. And, I think a lot of them came back quite invigorated as to the site preparation that Bannerman had been doing. And so from that perspective, I kind of look at them and say, they're definitely making the right noises and definitely preparing themselves. And, they've got a reasonably long timeline before they actually get pounds out. So, but yeah, it's going to be the next 6 months, get through June. And, I think you'll definitely, what I think is potentially the pinch point there will be price, and then, the cost of debt or whether they can go to the equity market. But everything else they're doing is kind of preparing themselves. However, that doesn't necessarily mean that continues, right? So if the price is not there, then they probably just delay it a little bit. And, like Brandon's been quite clear on that, and Gav's been running around town here last week, updating everybody as to what things look like. So, they're making progress. Deep Yellow is taking a slightly more conservative approach, where John's saying, I'm ready to go, but I'm not willing to do anything until the price is right. And, he's set a March end of this month, I think, hasn't he? Is that where he is at the moment, end of March for FID, which was December? Yeah, so, the problem with setting a date is you've already slipped it once, but I wouldn't be upset with him if he slipped it again, if he didn't think the market conditions are right to go and do something there. So, there might be others that kind of say, well, what's going on? But, I'm a really firm believer that, like Kamika is kind of saying, and what the conversion and enrichment guys have been saying in the market, prove there's a market for our pounds. And if that manifests itself in price, then we'll go and make the decision to build. But we're not going to get landed out here like a shag in the rock when you guys decide you don't want the pounds, because they can't go in the spot market. So I'm not too worried about a couple of those projects because, as I said, jurisdiction's fine, permits are fine, long lead items, all that sort of stuff. it seems that it's just price that's holding back,
or energy
funds.
flagged FID for, I think it was roughly this quarter as well. Mauritania, not Namibia. Do you think that gets pushed too?
Look, they've kind of surprised me, to be honest. It wasn't that long ago that Mauritania had zero nuclear IAEA, none of that. No policies, no government, no legislation, no radioactive handling, no transport, no waste. And so that country's come a long way. And, they seem quite comfortable with the fact that they've solved a bunch of those issues around what they need for developing. But again, it's going to come down to, are they going to be able to get the price they need to secure the debt that they need? And are the debt providers they're talking to, are they going to be in a position to move? Are they forced to, well, not forced to, they go down the route of a joint venture with a sovereign nation to get financing to do that? And, as I said, it comes down to, like, for them, it's funding. Like, they need to solve that funding. They need to either be able to convince investors that it's a good jurisdiction, they can get the things done, or there's a global agency or a joint venture. So there's still a few things that need to happen there. But as I said, it's kind of I've been happily surprised as to the progress they've made in country.
I've got a couple on your portfolio allocation that I'm interested to hear your thoughts on. Just going back to what you said earlier about incentive prices pushing up because of all these costs that have come out over the past year or so. Ultimately that's not great for the miners themselves because that hammers the profit, bar uranium price going even higher. So firstly, how does that kind of tweak how you allocate? Do you think more about putting more of the fund into physical on the back of that sort of news?
Yeah, I mean, I've been kind of wrong on sort of backing the successful restart stories, but then I was looking through sort of performance elsewhere, and there's not many places you've been right. You've just been less wrong. And so, I have not moved into SPUT. And at one stage I was kind of playing that SPUT discount game that I was talking about before, when it was a big discount, buying it, and when it came in, sell it back out. And then I kind of realised that I was probably contributing to making my own life more difficult because it was some of that was not letting the SPUT go to a premium. And so, and I always kind of, glass half full, was thinking that these turning points just around the corner, and that, I wanted to be in the equity. So if anything, I've not been anywhere near, I've not really added very much in explorers, except, two that are doing something. And I've kind of avoided a lot of that ECM in the bottom end of the capital stack, because I just think you need to prove the thesis is back. You need to start shaking out these shorts, and then they'll all come and raise money anyway because they haven't been able to. So, if you think there's an exploration story that is going to get some legs, then I'll get it on a capital raise. So, I have sort of been a little bit heavier because the reality is, when those heavily shorted stocks start moving, they're going to run pretty hard. And hopefully I'll go on a global tour and, go and meet some of these blokes in Manhattan that are now mixing cocktails because they've lost their jobs for being short uranium. But
I'd love an invite to that dinner. Just one more quickly on the portfolio allocation while we're on it. You mentioned last year, I think, in an interview that you did kind of recently, that you put a lot of the fund toward the tech side of things, giving you flexibility in the nuclear opportunities name. So I think you quoted 25% allocation towards these things. I'm a little less aware of how that basket has kind of performed relative to the uranium kind of names. Is the allocation still quite chunky on that side? Have you changed your thinking in recent times?
Well, so it was actually up around 35% on a notional basis, but most of the exposure was via call options. So there was a few stocks. I mean, there was a few names where I still had stock as well, and after we got a little bit of a bounce on after that Deepseek stuff, I hedged most of that out with some put options as well, any of the stock I had. And then I'm just starting to dip my toe back into some call options in these baskets because it's just so volatile. It's hard to some of them are screaming at me saying, buy me. But I just can't. I mean, I don't think I'm going to miss the turn because it was such a sort of thematic and meme that a lot of tourists were in there and a lot of tourists are out. And I don't think they're necessarily heavily shorted it, but they're just not there at the moment. So I kind of got some call options there. The positions I have are hedged out, and most of them aren't causing me any grief if they go down. So we'll just sort of play that one by and see how it runs. I mean, the reality is none of it's changed. None of that thesis has changed. Oh my God, whoever it was, Microsoft cancelled a few leases. Which some bank in the US or Canada reported, and everyone sort of went, oh, but that's more getting hit on just tech rotation, right? There's this rotation coming out of a lot of that stuff, and they were the kind of investors that were there. So I'm playing it so kind of cautious. And as I said, I was lucky that it's just such a good option market there. I was able to not have too much of that deep heartburn from Deepseek.
How are you weighing up all these, as you're saying, if everything's screaming at you, buy me at the moment, but if SPUT is going down and there's so hard to get info on who's contracted, who's not. So Boss we were talking about previously, I think we're pretty aware they've been selling into the spot and they're possibly going to, so you can see why these equities are going down because a lot of them haven't yet to put the big contracts in. But how do you weigh up what's cheap and what's not when the spot price is down and not knowing what they've actually contracted out or not?
Yeah, I mean, it's so that's a really good question. I think I'm kind of looking at so of those who are restarting, I mean, the reality is most of them aren't producing enough pounds to really cause themselves a problem if they were to just sit them in the converters. So you look at I mean, you said Boss. I mean, he's actually just, as I said, just probably monetized that 250,000 pounds at $100. So, there's cash flow from that EnCore loan that means he could probably just now ship some drums and set them in Confidant or Cameco or wherever they're going and wait. He doesn't need to do anything. The US guys, there was a few, yes, that were selling. One probably continued into the 70s, but has stopped again now. So, but again, that was sort of inventory they had. They're not necessarily replacing it with millions of pounds. So there's no pressure for them. But yeah, I mean, I think some of them, there is a thought process that the longer this goes on, the more desperate some of these guys might get and sell their pounds. But as I said, it's not actually a huge amount of pounds that are sitting around as a result of that. I mean, to the earlier point I made, I look at the US, for example, and from like you're sitting there at EnCore at these levels, they're producing pounds, and Canadian pounds are allegedly going to get 10% more expensive. I mean, it's just I can't understand how some of these guys who are kind of through most of their capex, most of their cost issues, and have got cake in a can ready to sell. I can't sort of see why they're all trading down as much as the whole sector. They should be trading a little bit better. But yeah, I mean, anybody with a legacy contract, you've got to look carefully at, because if they're behind on their ramp up and they're just producing enough to deliver into a contract, what's the price of that? It's not going to be $80.
No, I don't think any of them got them fixed. Is there, if SPUT's 20% below term, which it is at the moment, surely there must be more activity happening with carry trades with SPUT at the moment, or not yet?
I mean, look, I guess part of the problem is most of the utilities aren't very well capitalised. So they can't, it's hard for them harder at these prices to run a big carry book because the notional amounts that are out are larger, right? So
what about traders?
Well, that's most of them. I mean, like we're not. This is not a copper or an iron ore or a met coal or a fuel oil market. We don't have the Glencores, the Trafiguras, the Mercurias, and the banks in this trade, right? Like most of the traders in uranium, no one has ever heard of. And even physical traders in other commodities have never heard of these guys. So it's a really different. There's only one bank in it, and potentially the most well known is Traxys out of the US, who very specific in what they do. So, and the utilities aren't there, right? Like at a $20 price, they had the ability because there was brokers, there was other intermediaries getting involved and getting in the middle of that and kind of financing it all. But at $65 uranium, the dollar amounts that you got to do for this, and so what are you going to do? You're going to carry 100,000 pounds for a utility? They don't have the time to sit there and negotiate that sort of stuff. They're trying to get their conversion and enrichment out of Russia. So
What about NexGen, Guy, to probably finish off, like you'd say one of the more influential then again, you don't know what's influential on the market these days, out of Kazatomprom and NexGen, but like closer than ever to potentially be doing some sort of pre-construction activities, like to really start progressing towards some sort of development. Where are they at? What are we going to see out of them this year, do you think, in terms of potential funding, site activity, once that sort of administrative part gets passed by the government? Hopefully.
Yeah, I mean, that's exactly it, right? I mean, there's an assumption based on the timing of the Denison hearings that NexGen will be pushed back into early 26.
Oh, right.
And that's just literally an assumption because Denison were a month ahead of NexGen in some other, bureaucratic thing. It'll be interesting to see what happens. There's obviously a new Prime Minister in Canada as of today, Mark Carney. So it'll be interesting to see whether he drastically wants to change things around potentially. I mean, you think about it, right? You have got Trump wanting to put a 10% tariff on all your energy exports to the United States. Why wouldn't you try to remove some of the regulatory burdens to say to him, oh, look, there's a whole bunch more that could come on.
He's ex-Goldman Sachs too, so Trump's dealing with a banker now.
Yeah, Bank of England governor, Bank of Canada governor. He's on the board of Brookfield Renewables, so he was part of that Westinghouse deal that Cameco did with Brookfield Infra. So it's well trodden career, man. But NexGen kind of sitting there saying, look, we've got the support of all the nations. Don't look at Denison's timetable. We've got the Metis Nation, which, it was that part of that news headline saying blah, 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 which is completely irrelevant, not related to the Rook I project at all. But Lee and the team are saying, you're right, once we get this administration done on the hearing date for the final sign-off, we're ready to go. And it's hard not to believe them being outside last year and seeing the preparations they're doing. I mean, everything about that site is built to be a mine, right? You go up to all these Athabasca sites and you're on an ATV going over rocks and pebbles and boulders and bogs. Like everything about that site they've set up to be a mine. So, and the reality is, yes, leverage to spot, whatever. But it's still a phenomenal ore body. And, you kind of sit there and say, if you believe $65, is it trading fairly here? I think the answer is absolutely no. If you look at the term price and say, is it trading fairly compared to the term price? No, it's ridiculously low valuation because that ore body is phenomenal. So, I think it's just they're in a short basket of all these banks for Canadian tariffs, which they shouldn't be. And there's a whole bunch of people pointing at headlines that when you actually peel the layer of the onion back, you work out that, okay, yes, there's a spat between the Metis Nation and some exploration tenements with the Saskatchewan government, nothing to do with NexGen. And then they came out in support and said, we're 100% supportive, and the market didn't respond to it. I mean, it's again, the mindset where the market is at the moment.
Very good. It'd be interesting once they get deep and can start drilling in between themselves and PLS and see what else there is. I know they've had other hits, but yeah, that's what the theory is, like that old thing joining up. That's like potentially a lot of uranium coming out of that area once they, too deep holes to drill at the moment.
Yeah, no, exactly right. I mean, it's leverage beta is that one. It's spot goes up, that thing's going to rip because, again, you can own that. It does better for you than owning the SPUT. So, plus, as I said, the ore body.
Boys, you got anything?
I think we're all out. Guy, really appreciate your time.
Thank you so much, Guy.
Sensational, mate.
So hopefully, what are we, second week of March, hopefully this comes out just as everything's turning and we're running hard.
You got till Friday.
The bottom
Tick that bottom and we bounce up from here, mate.
Good stuff,
that's going to be the headline when it comes out. Guy Keller, no, don't say pick the bottom. Let's say something different.
That's all right. Just keep picking it and you will have picked the bottom at some point.
It's the title of the episode, mate. Guy Keller says uranium is bottom.
Easy, boys, but as I said, I think it's... The thesis hasn't changed.
There we go. What was his last line there? Guy Keller picks the bottom. It's like all the people that pick the GFC. If you just keep picking it, you'll pick it eventually.
To be confirmed, I reckon.
Yeah, that's right. Thanks to all the partners, as always.
In the show, we had K-Drill as well as Quattro Project Engineering. Who else we got, Matty?
Mate, Joe, don't forget about the $100 off for OzIMM Underground Operators. Links in the show notes. We've got MMS, we've got Grounded, we've got CMV Ground Support, CRE Insurance, WA Water Bores, SWIC, and Cross Boundary Energy.
Hootaroo.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.